All right. Hi, everyone. My name's Alex. I'm here with American Bookkeeping Services. I'm a bookkeeper. And yeah, I just wanted to take a little bit of time to go through the sample company that QuickBooks has and show you guys what a profit and loss statement looks like. So we're going to look at a profit and loss statement, how we can understand it, and how you can look at your own profit and loss statement and see if you're being profitable, because that's really what we want, right? So, yeah, one thing about the sample company, I'll put the link in the description, but anyone can access it. So, anyone can click on this link, you can go in and you can make whatever changes you'd like in the sample company, see what happens, run reports, and you're not going to be messing anything up. So that's pretty cool. It's kind of like a little a playground for your finances. So pretty neat. So we are on the dashboard. What we will do is we'll come down here to reports, standard reports. So you'll see here, once it loads, that we have three different ones that are already favorited. There's a profit and loss statement, there's the balance sheet, and there's accounts receivable aging summary. So accounts receivable aging summary is what people owe to us, so outstanding payments that should be paid to us. Balance sheet, so we have assets, liabilities, and owner equity and equity, right? So that's what's in our balance sheet. So anything that's an asset or a liability, right? We want to be keeping track of our liabilities, also our assets, and equity is part of that equation. And then also here we have the profit and loss, right? So we have, whatever our profits are. We'll just take a look at it right now. So yeah, at the top of the statement, once it loads, you'll see that we have, this is for the sample company, Craig's Design and Landscaping Services, from January 1st to today. So we have income. This is from operations, income from operations. So you'll see that there's several different categories here. It can be a little confusing to look at, so that's why I'm doing this, so we can take a look and just understand what some of these mean. You can see that there's quite a few rows here, and it can be kind of it can be difficult to read if we just look at it like this. So what you can do is we can just minimize all of these tabs here, and yeah, just that gives us just a really good initial look at what's going on in the business during this period. So something that you'll note is we can change our accounting method up here. So we have accrual and we have cash, right? So with accrual, it's we are doing the calculations when the money is either earned, when we earn money, or when someone else earns our money, right? Cash accounting is when we actually receive cash into our bank account, or whenever cash leaves our bank account, right? So that's what the cash accounting method would be. So accrual, if we send an invoice, then we've basically earned, or we've rendered services, we basically earned that money, right? So yeah, we can take a look. Profit and loss statement usually starts with the income. So the total income that Craig's Design and Landscaping Services earned during this period is $8,346. Cost of goods sold. So how much, what was the cost of the products that we actually provided to our clients, right? So that was about 405. Think of a physical product, right? We can also consider if you need to ship something to your clients, you can also, if you're doing that frequently, we can also potentially include that as part of the cost of goods sold. You could also consider that an expense, but we won't talk about that too much today. And then we also have, so income minus the cost of the physical things that we're giving to our clients, that equals our gross profit, right? So we have this income is also sometimes called revenue. Then we have gross profit here. And then we have our expenses, right? So we want to subtract our expenses. Obviously, we want to keep our expenses as low as possible. Always be looking for ways to minimize our expenses as much as we can. And then gross profit minus our expenses equals our net operating income. And then we also have some other expenses here. So we have some miscellaneous expenses. Subtract those expenses from our net operating income, and we get our net income here. So, yeah, we can take a look at some of the categories here. So it's a little bit tricky to look at, like I said, some of the categories here. We'll see we have one line item for design income. So the cool thing about this is we can click on these. If we go here, click on the right part, and it will give us a transaction report. So that's, basically all of the transactions that led up to this. Now you see some of these are still in accounts receivable, and some of them were actually deposited into our checking account. But the total for this is $22.50. So we can see we have all of our clients here. We have the sales receipt, right? So that's when they actually paid us, and then invoices, we're still waiting on them to pay us back, right? So we want to minimize that. So we'll go, but yeah, you can do we'll go back to the profit and loss statement, but you can do that for any row, which is pretty neat. So you'll see discounts given here. We have some different discounts, and it totals up to minus 89. So we basically essentially paid our clients back, right? This was for one of them, I believe, was for a refund or a discount, right? Basically discounts, right? So we want to reward them for being great clients. We can think about that. We will go back. And so the next part here is a little bit interesting. The sample company, I would have a little bit different categories for this part here. So we have landscaping services, and we also have job materials here. Now, job materials usually are things like tools that you would buy. Job materials usually would be a kind of expense, some kind of expense that we are using for each job. If we have to buy, a hammer, or if we have to buy sandpaper, or wax maybe, or for candles, or whatever it is, clay, we're making ceramics, that could be considered, or that could also be considered part of our cost of goods sold. Job materials might just be tools, for instance, right? So I wouldn't necessarily, in the sample company, I wouldn't necessarily call this job materials. I would call it maybe installations for these categories, right? It's a little bit interesting. And you'll see we have job materials here. We also have job materials in our expenses as well. So that would be, if I was the bookkeeper for this company, this is, something I would at least talk to the business owner about. Maybe we can change that, or, So, but anyways, we have fountains and garden lighting, right? This is how much the Craig made during this period from fountains and garden and lighting installations. Something else that's interesting here is that the labor we only have one $250 labor charge for, I believe it's only for one client. So we'll take a look here, and yeah, you'll see that we only had one labor charge, which is interesting. If it's a landscape business, you would think that, maybe they'd be charging for labor, and, you may have whatever however you're charging your clients may be different, but it just seems interesting that there's only one, and we have lots of other clients here. So yeah, we have job materials. We can minimize this, and you'll see we have all three of these: fountains and garden lighting, plants and soil, sprinklers and drip systems. This is all part of this job materials. This should be installations category. And then we also have this up here, which is anything that's not part of this category. So just the way that it's set up, this job materials is one kind of line or one kind of category, which does not include this upper top piece, right? So you'll see total for job materials $37.52. Total for labor, $250. $37.52 plus $250 is close to $4,000. $4,000 plus this $797 is, about $4,048.99, right? So when we minimize that, you'll see, $47.99, right? Sorry, $47.99. So that's why I like, it might be easier just to minimize as many things as you want. And then if you are looking at a particular section and you say, hey, this looks a little high, this looks a little low, then, maybe drill down and zoom in and say, okay, well, fountains and garden lighting, I didn't expect it to be this number. Then look in here and look at your transactions that way. Could be just an idea. So we have landscaping services, and we also have, this person has pest control services here. So they actually lost money on this. I believe this was the one that they had a refund. So we have lots of different transaction types in this here for pest control. So this person was providing pest control services. Maybe it was something new that they're trying to offer. They had pest control was ineffective for one of them, but the other three, it did fine. You'll see here that a credit memo. So maybe Amy's Bird Sanctuary, maybe they wanted to give them a free $100 coupon for pest control services, right? So that's why it's a minus 100, because we are creating a liability for ourselves, right? They could ask us anytime to provide those services, and we have to do it, right? So, and then we made $70 from Red Rock, and we also have this undeposited funds. So always make sure to clear that out as often as you can. Make sure to keep all of your undeposited checks. If you go to the bank, make sure to keep them in a safe box once you get them. And then, if you go to the bank once a week, make sure to take that box. Make sure that you're not forgetting any of your undeposited funds. All right, so we'll go back to the report summary. And we talked about pest control services, sales of product income. I believe for this sample company, this is just selling the physical products. So not doing any installations. So yeah, we have sprinkler heads, a rock fountain. I'm assuming here that they're just selling sprinkler heads, pipes, maybe someone wanted to just buy those products, right? And again, here it's 225 and we have 118. This is not the greatest thing if we have this more than a month old, all these outstanding invoices, right? So we'll take a look at the accounts receivable aging summary, but you can see even just in this one section here, even just in this, we have $912 of outstanding of money due to us, right? So that's a lot. We should take care of that and get on that as much as we can. So, okay, sales of product, income, services. See what's in there. Installation hours and lumber. We provided them lumber. So it's up to you how you want to categorize things and think about what makes sense for you. What are the parts of your business that you're trying to grow, you're trying to add a new section to your business, and you want to see, okay, is it viable or not? Is this something that I can make work? Is it a great profit or revenue stream that I could add? What are my existing kind of lines that I focus on? Which of those are making me the most money, right? Which of those are the most profitable? Which of those should I be focusing most of my effort on, right? So when we create a chart of accounts, or when we have these memos, these different accounts, these descriptions, want to make sure you should be looking at ways to categorize it for you to help you understand what parts of your business are more valuable, or maybe just how can you think about how you can organize it to help you achieve your goals, right? So we'll go back. All right, so we talked about services, and all of those here add up to our total income. So we can minimize this here. Landscaping services, and then so we had landscaping services, we have pest control services, sales of product income, and just regular services, right? So maybe we could write miscellaneous services just to help us out, or additional, So all of this adds up to our total income. Now we have our cost of goods sold. So this is, we said our physical products that we provided. So I believe this is fountains, pipes, and fixtures. Let's take a look here. Yeah, rock fountains, and pumps, and physical components that we're buying, right? So we bought those things. And then we had labor, and then, whatever our margins are on top of that, right? And labor costs and things like that, right? So cost of goods sold, we'll minimize that. There's only one entry, or one line there. Okay, and then we have our gross profit, right? So when we have income minus our cost of goods sold gives us our gross profit. Now we have our expenses category. So we have advertising, right? Automobile, fuel. Remember I said we have fuel, and then these are actually two separate lines. So the total for automobile should be $340 something, right? So if we minimize this here, 346. So this line could be, oil changes, parking for, whatever reason, right? Permits, anything like that. Car wash. Yeah. So we have advertising, automobile, and we have equipment rental, maybe for a trenching machine or any kind of digging equipment, right? Maybe an auger or something. Insurance. This is another line here. We have job expenses, and as part of job expenses, we have job materials, right? We said that we had another job materials, so job materials should be an expense. So we have decks and patio, plants and soil, sprinklers and drip systems. So we have all of these different expenses. We'll minimize that here, and job expenses totals up to be $602.63. We also have legal and professional fees, right? So we have accounting, legal fees, and whatever is not part of lawyer or accounting. And that comes to a total of $565. We have maintenance and repair and equipment repairs. So maintenance and repair is not part of, we have this separate line. So $755 plus $185 should give us $855 plus $85, $900 and something, $940. And we also have meals and entertainment. Make sure that those meals are in fact business meals, right? We don't want to be mixing personal expenses with our business expenses. If it's a company party, absolutely fine. Okay, and we also have office expenses, rent or lease. Lease maybe for the office or an office space. Gas and electric, we have utilities, so 2 different utility bills. And then our total expenses, if we minimize that, come out to be $40,1755. And when we do our gross profit, $79.41 minus our net operating income, that will give us 79. Our gross profit minus our expenses will give us our net operating income. And then we also have other expenses, miscellaneous, right? And we have net other income. Let's check this out and see what this is. So we have, looks like accounts payable. We have some bills, right? So this is, we owe, these are accounts payable. What we owe to other people. And it is for these dates. So we need to make sure that we pay those before they come after us. It's just good to pay things as quickly as we can. So if we minimize all of these, you'll see down at the bottom we have our net income, $1257.97. And something else, we mentioned cash and accrual accounting earlier. So remember we had a huge amount on, we'll take a look at it in a minute, but when we switch to cash and we run a cash accounting basis, we run the report, you'll see if we minimize these categories and make it easier to look at, we have a negative net income, and that's because we have so much in our accounts receivable that we actually have a negative bottom line, negative net income. So we don't want that. We want to be staying up on our accounts receivable as much as we can. And QuickBooks has great systems that we can automatically send emails to clients, automatically send invoices. You can have them send invoices before they're actually due, just as a reminder to help them out, right? So yeah, make it as easy as you can on yourself to get paid what you're worth, right? You provided a service, and we want to get paid for that, right? So help yourself out. We'll go back here, and yeah, I think we talked enough about the profit and loss statement for right now, but we'll look at the accounts receivable aging summary. And yeah, it's pretty helpful. So we can see, first of all, if we scroll all the way to the bottom, we can see that we have $5,200, almost $5,300 worth of outstanding invoices, right? That should be paid to us. So we have all these people, and we have, this is 1 to 30 days overdue, 31 to 60 days overdue, and 61 to 90 days overdue, 91 plus, right? So we have all these different categories. You don't have anyone that's over 91 days, but we definitely, as people start, as some of these clients start shifting over and over and over into, from 1 to 30 to 31 to 60 to 61 to 90, it becomes harder and harder to collect from them. So we want to try to just make it easy, collect as soon as we can, be fair to your client, within the first 15 days after, if you do invoices, make sure that you're sending them invoices. You can also set up QuickBooks to have it due on receipt, right? You can, or say, I'm not going to give you services until I get paid, right? So it's entirely up to you how you set that up, but just kind of can be a headache if you're, tracking down this kind of payment for work that you did. So just be fair to yourself. So yeah, makes it easy to break it out by client here. And yeah, just take a look at the accounts receivable aging summary. Yeah, and I just wanted to say that this, I'll post the link again, but QuickBooks has this great, it's a sandbox, right, that you can explore around and see some of the features that it has. You don't have to worry about breaking your own business's QuickBooks page, and you can look around. You can, change things. You can do, make your own reports here and practice your own bookkeeping if you like. So yeah, again, excited to keep making more of these videos. My name is Alex. I'm a bookkeeper with American Bookkeeping Services. And yeah, if you ever need help with your books, feel free to let me know. And yeah, I'll see you guys next time. Thanks.